Everyone, welcome to my YouTube channel. In this particular video, I'll solve one more problem related to income from house property. Shri Kishore is a resident, is the owner of three houses. So he has three houses. The following are the particulars of his property for the year ending 31st March 2023. Yes. So this is the last date of our previous year. So first house is LOP to bank, second house is SOP, self-occupied, third house is also LOP. So they have given the annual rent received, then municipal value they have given, municipal tax paid by the assessee they have given, municipal tax paid by the tenant also they have given, and total municipal tax they have given. We should only consider the municipal tax paid by the assessee. ಕೇವಲ assessee pay ಮಾಡಿರ್ತಕ್ಕಂತಹ municipal tax ಅನ್ನ ಮಾತ್ರ consider ಮಾಡಬೇಕಾಗುತ್ತೆ. Fire insurance premium, you have to ignore that. Interest on loan taken for renewal of house, that has to be considered. So with this information, we will have to compute the taxable income. We have to have four columns. First column is LOP because first house is LOP, second house is SOP, third house is LOP. So now first let us solve for the first house. So we have to first compare municipal rental value with fair rental value. Municipal rental value they have given 32,000. Fair rental value they have not given. So I will compare municipal rental value with fair rental value. Out of these, whichever is higher will be considered as notional rent. Notional rent is 32,000. Now this notional rent I have to compare with standard rental value. In the question, they have not given any standard rental value. When it is not given, you will consider it as 0, and 0 will not be considered actually. So the 32,000 will only be the reasonable expected rent. Now this reasonable expected rent should be compared with actual rent. So they have given directly in the question actual rent received is 30,000. So I will write that 30,000 here. So out of this, whichever is higher, 32,000 is higher. So 32,000 will be considered as GAV before vacancy period loss. GAV before vacancy period loss. From that, we have to reduce vacancy period loss. Vacancy period loss is 0. So after deducting vacancy period loss, we will get GAV after deducting vacancy period loss, that is 32,000. From that, we have to reduce the municipal tax paid by the assessee. Whatever the municipal tax paid by the assessee, we have to deduct that. So for house 1, the assessee has paid 1,200 rupees municipal tax. So municipal tax is 1,200. So when you deduct this 1,200 from 32,000, we will get 30,000 rupees, that is NEV. On this, we will give deductions under section 24. We have two deductions. First one is standard deduction. So standard deduction will be 30% on NAV. So NAV is 30,800. On that 30%, if you calculate, it is 9,240. 30,800 minus 9,240 will be 21,560. That is our total taxable income from house property. The second deduction is interest on borrowed capital. For house 1, there is no interest on borrowed capital, so I have taken it as 0. Now come to SOP. So SOP till NAV everything will be 0. NAV tanka ella 0 irutte. Standard deduction will be 0 because there is no NAV only, so we cannot give any standard deduction. So, okay, but we can give the interest on borrowed capital because in question they have given that interest on loan taken for renewal of house is 7,000. So that 7,000 can be given as deduction. Okay, so we will have a negative balance, that is 7,000 will be negative. Write it in brackets only. Third house we have LOP. So again we have to compare municipal rental value with fair rental value. Municipal valuation they have given 30,000 and fair rental value they have not given. So I will compare 30,000 and 0. Whichever is higher, 30,000 is higher, so it will be considered as notional rent. Now this notional rent will be compared with standard rental value. Standard rental value they have not given in the question, so it will be 0. So 0 should not be considered. So the remaining part, 30,000 rupees, will be considered as reasonable expected rent. Now that reasonable expected rent will be compared with the actual rent received. So in question they have given that actual rent received is 24,000. So 30,000 and 24,000, whichever is higher, 30,000 is higher. So that 30,000 will be considered as GAV before vacancy period loss. From that, we will subtract the vacancy period loss. There is no vacancy period loss, so it will be 0. After that, we get GAV after deducting vacancy period loss, that is 30,000. From that, we have to reduce the municipal tax paid by the SSE. So for LOP, it is 33,000 is the, for the house 3,000 he has paid the tax. So I will deduct that 3,000. The remaining 27,000 will be net annual value. On this 27,000, I have to give standard deduction, that is 30% on NAV. 27,000 into 30% will be 8,100. Next, interest on borrowed capital. So there is an interest on borrowed capital 5,000 that has to be given on as deduction. So 27,000 minus 8,100 minus 5,000 will give you 13,900. From two houses we have profit, and from one house we have loss. Now we have to set off the losses from house property. This is known as setting off the loss from house property. So first write the profits or loss whatever the house has got. From house 1 we have got 21,560 as profit. From house 2 we have got 7,000 loss. From house 3 we have got 13,900. So in order to get the income, total income, so 21,560 plus 13,900 minus 7,000, if you do, you will get 28,460, and that 28,460 is the total income from house property. This is how we need to solve the problem. In this problem, we have learned how to set off the losses from house property. Hope you have understood how to set off the loss from the house property. If you have any doubts in this problem, please put your doubts in the comment box so that I'll respond to your doubts as soon as possible. Thank you for watching the video. I'll come back with the next video.